Hello traders, Gary Wagner here. It is approximately 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, 4th day of September 2025, and this is the evening report for gold and silver. After 6 solid days of gains, gold fell today on profit taking. However, gold remains near its all-time record highs and closing prices. The rally in gold reflects market expectations of a more dovish U.S. Federal Reserve as the Fed anticipates growing inflation. Market participants expect a September interest rate cut by the Federal Reserve, and that should increase the appeal of non-interest-bearing bullion. On top of that, gold has been benefiting from a weaker U.S. dollar, as well as continued strong central bank accumulation. Gold prices did decline today, with the most active December contract currently down $17.30. That is a net decline of 0.48%. However, gold traded to a low in overseas trading last night of $3,573.70. Gold is down an additional $4.50 as the markets are now trading in Australia, with the most active contract currently fixed at $3,598 per ounce. Silver also declined, giving up 49.5 cents or 1.18% in New York trading, and as we move into Australia, it is down an additional 10.5 cents, with the most active futures contract currently fixed at $41.20.5. And declines in both gold and silver were mostly due to market participants actively selling both precious metals, with dollar strength aiding or accelerating the decline in gold and silver. The dollar gained 0.14%, taking the index to 98.299. First, I do want to cover our current trade, which we entered on the 25th day of August at $3,410. We consistently moved our stop up until the other day when we moved it to $3,580. As you can see on today's candlestick, the low was just a couple of dollars below that at $3,573, obviously stopping us out. We entered the trade at $3,410. We exited the trade at $3,580 for a profit of $170 per troy ounce, which when calculated comes out to $17,000 per COMEX contract. I'm quite happy with this last trade. So the question now becomes, will today's strong decline signal the beginning of a real correction or a real price decline? If so, where could gold trade to? And what's the probability that this is just a one-off? While this could be a one-off before gold continues to rise, I think that the probability of that is low. The reason being, considering that gold moved from $3,351 up to a high of $3,639, the total gain on this rally from the low to the high was about $288, which is a very, very strong rally. And therefore, I would think that the highest probability is for there to be a correction, but a shallow rather than a deep correction. By shallow, I mean either to the 23.6% fib retracement that comes in at $3,572, or at the most $3,530 or a 38.2% fib retracement. To confirm that, we will need to see a continuation of today's selling pressure at least through the end of the week. If we see a recovery, I would want to see a close that was above 33.60. I would prefer a correction simply because it would give ourselves the opportunity to position ourselves at a much better entry price for the next leg of the rally. But traders, I believe we will get an indication if today's session and lower pricing mark the beginning of a correction relatively quick by the end of this week or the beginning of next week at the latest. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.